but Bitcoin is still in a bull market. Bitcoin is still coiling. And I think that we will see much higher prices through the end of the year. Now, does that mean that we're going to see $400,000 Bitcoin price? That seems a little bit less likely to me, but I could easily see us hitting $150,000 or so before the end of the year. Some people are not excited about that as a return. They say, what do you mean? I wanted to have hundreds of percent of upside. That's just tens of percent. But I still think that now what you are talking about is a $2.4 trillion asset. And if it goes up, let's say something like 30 or 40%, that is a heck of a lot of market cap that's getting created. And so I would expect Bitcoin to use these things to its advantage. There's more buyers than sellers. It's going to continue to go up in price over the coming month.
Bitcoin was once defined by extreme volatility, massive bull runs, followed by brutal crashes. But since the approval of the Bitcoin ETF, that narrative is evolving. Instead of sharp peaks and plunges, we're now seeing a steadier 45 grind upward. By the way, if you're enjoying this breakdown, make sure to like the video, subscribe, and drop a comment below. It not only helps the channel grow, but also signals to the algorithm to share this content with more people like you. Let's continue. Corrections still happen. The most recent dip was around 30%, but that's mild compared to 2017, when we saw 6 similar pullbacks in a single bull cycle. The market is maturing. The structure is changing.
Bitcoin is a decentralized computer network that is measured the security of it by hash rate. And it is by far the most secure computer network in the world. If you were to take all of the computational power of Microsoft, Azure, Google Cloud, and Amazon's AWS, and collectively put those 3 things together, it would not be equivalent to 1% of the Bitcoin network. That's how big this network is in terms of size, scope, and strength. Now, the fact that Bitcoin's hash rate continues to hit all-time highs means that the strongest computer network in the world is getting stronger. And so that is part of the beauty, is this architectural design of Bitcoin and the incentive system for these miners. There's over $100 million a day that goes to miners right now in terms of that mining reward. And so they are being paid very well to continue to secure this network, which now is protecting $2+ trillion, like $2.3, $2.4 trillion worth of value. And so whenever you see kind of the size and scope of the Bitcoin network, one, you got to be in awe of the fact it's not just this like software-based asset that's got a ticker attached to it. And all the finance folks are like, ooh, it goes up, it goes down. Look how shiny it is. You have to remember that we have been able to collectively as a community build the strongest computer network in the world by a mile, and do so with no centralized coordination. There's no CEO, there's no board of directors, there's no management team, there's no marketing budget, there's no anything. And so people around the world found out about this idea of Bitcoin. They knew that there was an economic incentive, and they were able to go buy the hardware and equipment, find energy, plug themselves in, and start to mine Bitcoin. And in exchange for that, they helped create the strongest network in the world. And so I think that the fact that Bitcoin is sitting near all-time highs and hash rate is hitting new all-time highs tells you that Bitcoin is not just some speculative tool. It is actually something that has real-world conversion of energy into economic store of value, kind of product feature or capabilities. And so from that standpoint, I think that Bitcoin is very, very well primed for not only price appreciation in the future, but more importantly, to remain secure. And if Bitcoin remains secure, then Bitcoin's value over a long period of time will probably become realized. What you get is you get kind of these run-ups, you get some consolidation. Every once in a while, if you get a little overheated, right, you'll have these corrections 15 to 30%. Now, saying 15 to 30% to somebody in the traditional world,
yeah, that's a lot,
insane, right? To the Bitcoin world, like that is a normal, healthy drawdown during during a bull market for Bitcoin. And so I think that the fact it's run up and kind of consolidated is telling you that there's a lot of demand, right? There's kind of this persistent bid in the market. Now, 2 things I'm going to call people's attention to. The first is that there's this great chart that shows you have these kind of big booms, busts, booms, and busts, right? Kind of the bull markets and bear markets, all the way up until the ETFs get approved. Since the ETFs have been approved, it has pretty much been a 45-degree angle grind up in price. Now, that doesn't mean that we won't still get some sort of blow off top and a correction, but it does mean that the market seems to have significantly changed in terms of structure. And we now have constant inflows into Bitcoin, which means that the volatility is being muted. You're not getting these huge run-ups in terms of 20, 30, 40% at a time. You're getting more kind of 5 to 10% moves up, but you're also not getting significant drawdowns. If you think we really only had one 30% drawdown in this bull market so far, in 2017, we had 6 of them. So that volatility is starting to come down and become something that is actually key to unlocking the institutional capital. They don't want an asset that goes up 10,000% and down 80%. What they want is they want something that continues to grind upwards. That's what Bitcoin has now become. It's very good for the existing holders. It's very good for eliciting new capital coming into the market. The second thing I want to call people's attention to is if you look at how much Bitcoin is being bought, I can't remember if it's the ETFs and the treasury companies or it's just the treasury companies, but more than 600% of the daily incoming supply is being bought on a daily basis. So the way to think about this is you have 6 times more buyers showing up than quote unquote producers of the Bitcoin, right? On a daily basis. Well, if that's the case, Bitcoin's price has to continue to go up. There's more buyers than sellers. So what happens? The price has to adjust to accommodate everyone, especially because Bitcoin is a finite asset. And so from a structural standpoint, Bitcoin is looking excellent. And yes, Bitcoin is up something like 80 or 90% over the last year. Yes, Bitcoin is up about 25, 30% year to date, but Bitcoin is still in a bull market. Bitcoin is still coiling. And I think that we will see much higher prices through the end of the year. Now, does that mean that we're going to see $400,000 Bitcoin price? That seems a little bit less likely to me, but I could easily see us hitting $150,000 or so before the end of the year. Some people are not excited about that as a return. They say, what do you mean? I wanted to have hundreds of percent of upside. That's just tens of percent. But I still think that now what you are talking about is a $2.3, $2.4 trillion asset. And if it goes up, let's say something like 30 or 40%, that is a heck of a lot of market cap that's getting created. And so I would expect Bitcoin to use these things to its advantage. There's more buyers than sellers, and it's going to continue to go up in price over the coming months.
Pompliano zooms out to a macro view America's strategic dominance on the global stage. He points to a recent US-EU trade agreement, calling it a 4-game sweep, a total victory for the United States. His reasoning: Europe is a museum, America is the future. Blunt as it sounds, Pom's takeaway is clear. The US is reasserting its global leverage economically, militarily, and technologically, and that matters for Bitcoin. Because the stronger the US financial infrastructure becomes, the more fertile the ground is for Bitcoin adoption through regulated ETFs, institutional custody, and mainstream financial instruments.
One of the things that Trump said during his first campaign, which turned into a meme online, is we're going to win so much, you're going to get tired of winning, right? And it was just kind of one of these, it's like Eric Adams type line, right? It's just like, you're like, okay, like hilarious. Let's see if it actually happens, right? But hilarious line. This is what winning looks like in a international trade deal.
Okay.
I mean, this was like a 4-game sweep in the NBA championship. This was like showing up to the NFL Super Bowl and all of a sudden you're winning so bad that you take your starters out and you let your second string play their best players just to get your guys some time in the Super Bowl, right? I mean, we wiped the floor with the EU in this deal. They got nothing.
But why?
We got everything.
Why was he able to achieve this?
Because the EU is a museum and America is the future. That's point blank, period. People may not like it, but that's true. We have better technology. We have better capital markets. We have more innovation. We have a much more sought after kind of consumer base, and everyone wants their products to come to America. Not that many people in America are worried about selling their products in Europe. And so what we got here was literally almost everything we asked for. Let's go through these things. They are going to buy hundreds of billions of dollars of military equipment from the United States. Do you think anyone is better at building military equipment than the United States?
No.
Probably not. Are there some good companies in Europe that build military equipment? Of course. They actually, some of the defense contractors and defense companies in Europe turned into meme stocks earlier this year. Some people don't know that. But America is the best when it comes to building military equipment. So the EU, who, by the way, a lot of their countries, they're real worried and they keep yelling and screaming and begging us to come and protect them. So now they got to buy our military equipment. Makes sense. Have them pay for a service that we are providing to them. Simple. The second thing is energy. The EU has made, collectively, a bunch of their countries have made absolutely asinine, idiotic decisions when it comes to energy independence. Countries like Germany, literally, people go back and remember, Germany was shutting down their power plants. They were trying to go to like wind and solar and all this crazy nonsense. And guess what happened? Russia-Ukraine occurred. And all of a sudden, Germany said, we're not going to buy the Russian oil. Okay, fine. You know what ended up happening? There's a bunch of studies that show that Germany actually was still buying Russian oil, but they were buying it from China. So Russia was sending the oil to China. China was literally putting the Chinese flag on the barrel of oil and then selling it to Germany at 2 times higher prices. And so if you make dumb decisions, you're going to end up in this situation. So now the US is an energy exporter and Europe needs us. Imagine how crazy it is that you are buying energy from the United States. There's literally an ocean between us rather than being able to source it inside of the European Union, a bunch of countries all working together, or buy it from other people who are on the same continent as you or in a general geographic area. Shouldn't these EU countries be getting it from places that are resource rich, like the Russias of the world, like the Indias of the world, like the Chinas of the world? But instead, they're now going to come to us because we've done a great job. We are drilling for oil. We're producing renewables. We have battery storage. We have all these things that we've been working on that are putting us in a good spot. So the US is winning on that front. Now, they're going to pay a 15% tariff. Remember everyone who said they're never going to agree. They're never going to do the deal. They're never going to blah, 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 whatever. Bada bing, bada boom, bam, bing, bong, boom. Now all of a sudden they're paying a 15% tariff. Why are they doing that? Right. Because we know that they need to access our market. So if they want access to our market, we made 2 demands. We said, you got to pay a 15% tariff. Why is it that you get free access to our market while we are subsidizing so much about your countries? Now, again, they help us too. They're our allies, right? This is not a zero-sum game, but what we have been living in is a situation where Europe has been taking advantage of America, and America finally woke up and said, wait a second, we're the big brother. You're the little brother. Why are you taking advantage of us? If you want to be our ally, let's get this on a more even playing field. And so now Europe's going to pay this 15% tariff. Now, in reverse, America was previously prevented from bringing a bunch of our products and services to Europe. Think of how crazy that is. They had free, full, unfettered access to America, and we, not even a tariff, we just weren't allowed to sell some of our products there. Well, we're going to play around now. Let's get an even playing field. So now they're going to open up those US markets. And so now American producers can go and sell into these markets. And so what I think ends up happening here is people will look and say, like, how the heck did the White House, the Trump administration, get this deal done? And here's the thing that I think is what nobody wants to really talk about is that in Europe, there's a lot of weak leadership.
Bitcoin isn't just a number on a chart. It's a technological revolution backed by real-world infrastructure, energy converted into economic security, decentralized coordination at a global scale, and right now, it's riding a perfect storm: rising demand, reduced volatility, institutional inflows, and geopolitical tailwinds. As Pompliano put it, this is what winning looks like. The future is being built right now. So the only question is, are you watching from the sidelines, or are you in the game? Thanks for watching. If you found this valuable, the next video is even better. Click it now, and let's keep going.